Is everyone underinvested in the U.S.? Hi, everyone. I'm Maggie Lake, and today I'm talking markets with Tony Greer, editor of the Morning Navigator and co-host of the Macro Dirt podcast. Hey, Tony.
What's up, Mag?
I am looking forward to a long holiday weekend in the U.S. We're not there yet, but I think you just said the greatest thing I heard today, which is that this is a synthetic Friday for you. You're close to calling it for the week.
Yeah, we're going to knock off a little bit early here at TG Macro headquarters. That's for sure.
Oh, we got to do it. It's kind of like been the long 6-month march, but it feels like we're in a good spot now. Just before we jump in, hey everybody who's watching us live on Substack and YouTube, great to see you. I feel like everyone's probably feeling the same way, which is happy to see some of the print, the markets, but a little bit hoping maybe we get some quiet over the long holiday weekend, but you never know about that. Let's not get ahead of ourselves. So I want to hear what you think about the markets, Tony. Despite all the doubters, we have the big, beautiful bill making its way through Congress, got through Senate, back in the House. Looks like it has some momentum, even though I'm sure they'll be bickering right up until the end. U.S. stocks are at records. Yields seem to have stabilized. What do you make of what's going on?
I mean, I make a really bullish cocktail in the stock market when I dissect it, Mag. I'm most interested in the fact that I was just away overseas while we were bombing the snot out of Iran's nuclear facilities. And I keep looking at my market watch list to see when the S&P is going to go down 500, and it just didn't happen, and the most we got out of that bombing exercise was like a limp-wristed 20 bid in the VIX and back offered again. And it just didn't create any kind of panic on the downside. That to me, it held a critical support level when it tapped 5,800 at the moving averages and bounced off of there. Coming out of ending that bombing route, we have Trump pounding the table 10 different ways through Sunday that he wants rates lower. Mm-hmm. And I'm not picking a fight with President Trump on interest rates. There's plenty of things to pick a fight with that guy, and that is not the one that you want to pick, in my opinion, because he's going to get them lower come hell or high water. I think that's obvious. Whether he has to change Fed chairs midstream, whether he has to give Bessent the job, he's going to get rates to 1 or 2%, like he says, because there's no visible inflation. That, to me, is part of the reason why I think Bitcoin took off. The NASDAQ is taking off. We've got the S&P 6275 bid, a new high for this move. And it feels like the path of least resistance for a couple of 100 points now is going to be higher. So I think that we're going to start making our way through 6,500 with this move. And then we'll see from there. July is seasonally a very positive month, the month of the VIX melt. Right? There's nothing going on, and you can't be short stocks in a bull market when there's nothing going on, because what happens is the rotation takes over. And one day they're buying uranium miners, and the next day they're buying aerospace and defense, and the next day they're buying gold miners, and the next day they're buying industrial miners and social media. And it's just everything bubbling up to the top. And it's really hard to fight that if you're bearish.
Yeah, that's a really great point. We've seen there've been some comments, and we've seen some people talking about the fact that, what was this really, really narrow, tech-led Mag 7, whatever you want to call it, rally that had so many people worried about the composition of U.S. markets has broadened out. And you've got financials actually doing really well. As a leader, you had industrials doing well. When you look at where we are at this mid-year point, does it feel like that? You just described a situation where it looks like maybe you think that broadening is going to continue through other sectors and not just be so isolated in those few handful of stocks?
Yeah, I don't need Mag 7 to lead if my rotation shows a sort of, baton handoff between cyclicals, technology, and natural resources, depending on what day of the week it is. We just had industrial miners and uranium miners take off. They've made their way onto the top 5 or 6 sector leader of the leaderboard. Aerospace and defense has been rifling higher as we're dropping bombs. Go figure, right? Like a material move, a 15% breakout, right? Like that's something that's tradable. When you have cyclicals, technicals, natural resources picking up, like copper hasn't gone anywhere, but it's gone bid enough to get industrial miners out of their, out of their range and start, propelling higher. You've got the platinum trade and silver taking hold, right? The white metals now are competing with gold in that sort of race against fiat currency depreciation. So I keep looking at these store of value trades. I look at gold, I look at Bitcoin, I look at gold miners. They all look good right now. Money supply keeps rising. Rates are kind of ratcheting lower. We haven't gotten overweight in sentiment yet. I looked at the CNN fear and greed to be scared that we were going to be at extreme greed all of a sudden. We're at greed 61. You know what that is? You know what that shows me, Maggie? A lot of room to improvement until we get to red line 99, extreme greed, and then we can stay there for a month, right? Before something that goes wrong that derails the rally. So we have a long way to take sentiment into the bull side. We have a long way for stocks to follow through technically. I love being long sectors like the NASDAQ that are trading into all-time high territory because nobody knows where she stops. This is bull market conditions, and I don't think people are positioned for it after puking their brains out after Liberation Thursday. So
yeah, that's a great point because I mean, there is that recency bias, and you still have a president that's, happy to get on social media and tweet. So there feels like there's that headline risk, but sounds like you're looking right past that. By the way, I should mention there was an announcement of a trade agreement with Vietnam today. And so the forward motion is different than you cannot like the substance of what's being negotiated. You cannot like where it comes down. But I just had someone earlier say to me, they're deals. If you don't like the deal, that's fine, but they're deals. There's legislation moving through. You may not like the outcome, but there is some sort of settlement, and some of that uncertainty may be going away. You think that's also going to be a positive here? And how does the whole tariff trade thing fit in for you?
So the way that I look at the tariff trade is that Europe, both hedge funds and mutual funds, blew their brains out into the hands of American retail down to S&P 4,800. The Europeans are going to have career risk if the U.S. keeps performing and they don't have any. And the retail people that bought the stock from these puking hedge funds and mutual funds, that stock has gone away into a lockbox into their 401k that they're going to hand over to their children on their deathbed. So my point is that the Europeans that are going to try to reposition for the U.S. rally are not going to have a seller sitting there waiting to hand them the stock back that they sold, right? So there's going to be a period where my biggest fear, especially for July, which is going to kill me, and maybe it'll be okay because I'm positioned right, but I'm afraid that we might go into a VIX 10 bid at 13 scenario where we have these 30 and 40 point ranges in the S&P for a net gain of 10 or 12 handles a day, and volatility just goes to sleep. That's a tough market to trade. That's a market scenario that we've seen before. And if you're not positioned for it, there's almost nothing you can do because there's no rifling breakouts. There's not enough volatility to buy things cheap. And that's a difficult scenario for me to trade in. That's not a tactical trader scenario. That's I hope you're positioned right for the ride kind of thing. So that's kind of what I'm worried about, if anything, after getting through the tariff war, getting through the bombing of Iranian nuclear facilities, getting through the big, beautiful bill, or however you want to call it. It sounds like that thing is going to be another coal on the fire of the monetary debasement story, right? The narrative that gets Bitcoin and gold on the run is that, they passed another bill that's going to be another $5 trillion onto spending over the next couple of years. Bitcoin loves that, right? Like that's the driving force behind the Bitcoin trade. So you start seeing things like that go, the NASDAQ at all-time highs, Bitcoin inflows never stop. I mean, this is a frothy risk-on market, if you ask me.
Yeah. Great point about
starting to get frothy. It's going to get there. Go ahead.
Yeah, great point about there's no one there to give you that trade if it's in retail hands. That's kind of that's an interesting dynamic that you're pointing out. We always talk about this, and J&J mentioned that you're a sort of short to midterm trader, and that is true. So what Tony's talking about is coming at this from a tactical trading point of view and sort of thinking about this through July. I mean, we haven't even got to August yet, which I will. So very important to point that out. This whole sort of rotation out of U.S. assets, Tony, it's still out there, that narrative, even though we've seen this huge comeback in U.S. markets off those lows that you rightly point out, maybe many weren't positioned for, especially Europe. Do you worry about that sort of this generational rotation out coming back to the fore at some point? Because those folks may be more focused on valuation. if there are longer hands in this, like pension funds abroad, sovereign wealth funds, who maybe are looking at, an asset allocation that's overexposed to the US and looking to fix that. Do you buy that, or do you think that's an overstated, if the winners are racing, it's going to be hard not to participate?
They're going to go from worrying about valuation to worrying about job risk. And they're going to have to worry about performance somewhere along the way, because I have never seen valuation stop a raging bull market. You know what I mean? Like, we just came out of a year where NVIDIA, ran, God knows, 100%. Semiconductors were at the top of the leaderboard, up 58%. And that trade ended, and we got into this cyclical rotation. Now semis and NVIDIA are right back to all-time highs, breaking out again. Like, the market's got muscle memory for that alone, And I feel like, this one thing that this drove me batshit crazy. When Trump was elected and he came right out as the America First president, every super smart guy on the street was like, this is going to be the Costanza trade. This is the end of the American overperformance. Everybody's going to get out of America now because Trump is president. It's been overperforming for too long. He's America First, and that means that's the U.S. is done overperforming. I'm going to tell you, this is the point where the U.S. goes parabolic over the other European deindustrialized souvenir restaurant shops, right? Because we're going to take over as the leader of the G7, economically. And America First is going to put us in a better position competitively against Europe and against Japan. And U.S. outperformance is going to continue in spades. Like, I had no idea why everybody thought that trade was going to end. And they thought that trade was going to end. They saw the tariff war. They puked the U.S. And now the U.S. is at all-time highs as nobody's got any. So I want to see how that transpires, where all of a sudden the U.S. is failing and all of a sudden we're investing in Europe because they're still economic dog shit. You know what I mean? I just don't understand where the logic is in that trade. So I'm going to stick with U.S. outperformance going vertical for the next couple of years.
Interesting. Listen, I think this is a conversation and a debate that's going to continue because certainly there are a lot of folks on the other side of that who feel pretty strongly about valuation, who feel pretty strongly about sort of there being risk associated with being in dollar assets because of the falling dollar.
Yep.
But you make an interesting point, especially when everyone starts changing their positions. And you have to wonder how much of it is tied to a dislike of Trump and whether that narrative is overcoming, some other, some other calculus to that. Some people would say no, but this is why it's interesting to keep having this conversation with different folks. We've got so many good questions coming in. Let's try to get through a few of them. This is from Nikos. Did TG get into home builders? Looks like they broke his magic number 95.
Just yesterday, ITB got above 95. It went on a huge run. It had a huge day. It coincided with rates, staying sort of stable at the low end of the range. And now there's a great base in home construction, Nico. So, this trade is green light go. Like I said, it went 95 bid. I'm buying them. This is a trade that is definitely going to make its way onto the view matrix.
Awesome. Sam has a couple of questions. I'll see if I can get to more than one, Sam, but we touched on it, but I need to hear Tony's outlook on gold. He pointed out you've been tactically in and out of this, but now that we're testing 3,400, how do you feel?
Look, I'm alone in the cold in gold right now, right? I'm not bullish. Everybody else around me is bullish. I'm going to tell you why I'm not bullish. Gold made an all-time high on April 22nd of 3,500, right? That was in April. In May, on April 22nd also was the Barron's cover article. If gold is outperforming everything, if you want to know how to get in on the action, read this article, right? Barron's cover curse all over the trade. You have to make a mental note when that comes out. Was that the high, or was that around the highs? And you look back and you say, so far it has been. Right. So we've got the Barron's cover curse pasting gold up in April of 3,500 on April 22nd. We go into the month of May, dollar goes down, gold goes nowhere. We go into the month of June, dollar goes down again, gold nowhere. I'm sorry, but that sucks. That absolutely sucks. If you're long gold, you have to be massively disappointed unless you're so subjective about it that you don't care.
Mm.
You know, so with my disappointment, I reflexively make a sale. I'm less long gold than I was. If it goes up, I'll be a little bit disappointed that I got head faked out of my gold. But at the same time, looking at the world the way it is now, there's a couple of trades to me that look better than being long gold at $3,400.
Right. And is this from a trader perspective or from sort of a long-term portfolio? Because gold is sort of like, if you're worried about fiat currency risk, maybe you want some hard assets or increase your exposure. But from a, where are the best opportunities for my trading book in the next 2 to 3 months? It sounds like you're talking from that side of the ledger.
I'm also talking from the side of the ledger that the dollar debasement story and trade is now household dinner table conversation.
Mm.
I have national champion lacrosse players from Cornell texting me, asking me about foreign exchange. Like, what? Literally. Like, if that's not a sentiment bomb, like that tells the whole story, I don't know what is. So my point is this, Mag, right? The dollar's been down 10% in a straight line, like a falling rock. Not like the dollar usually trades. It's trading like Bitcoin. Right. So it's been down 10% in a straight line. Everybody, including the college world champions, are talking about the foreign exchange market. What happens if there's a bounce? What happens if there's a 3% bounce in the dollar? What happens to gold? I'm going to tell you, it's at risk of getting shit canned for $500. You know, and I'm kind of getting out of the way of that. I feel like the long precious metal trade is the most popular trade. It's the same as being long tech stocks in 1999. At this point, right? Everybody's like, you see the dollar debasement? Yes. How low is it going? Much lower. Are you short? Yeah. You know what I mean? Like, the whole conversation is unwinding that way. So I'm saying, okay, if it bounces, the gold longs are going to get smacked in the face. That's my theory. And I could be wrong, but that's how I'm going to continue to play it until I am wrong.
Yeah.
So
No, good points. You all listening know about Tony's long history with Lax, right? That he was a player himself at Cornell, right? Are we getting a professional league with Lax? What's going on?
Oh, there's a great one. There's a great league of PLL. And now I'm just a fan from afar, and being a part of the Cornell lacrosse family is a gift that keeps on giving to me. So I'll always be there to participate in. And now we're national champions. So it's the best.
Well, and it doesn't get any better than that, right?
Nope.
George is in the chat. George Noble. Hey, George. Saying, hey, Maggie, Tony, energy can't get out of its own way. Too hard pile, question mark.
The energy trade's a tough one, G. It just can't, you know, it's one of those to me. Like I just did an interview with another guy who was asking me extensively about oil. And my point was like, I don't have an axe to grind in oil because oil doesn't have an axe to grind with me, right? Oil price looks comfortable where it is. There's plenty of refined product floating around in the harbor. So there's no shortage story. There's no contango trade. There's no backwardation trade. Oil's just at a good price for the consumer and the producer to survive right now. And until we get pushed to a pressure point on either side, my bias is to still be long them because I still think that they're undervalued and they're too small of a percentage of the market in general. But I agree with you that they aren't performing great, and I'm not counting on them to. That for a change, they are just now all I have in energy is some sort of standard allocations in long-term accounts that I really don't plan on selling much of, you know, because I want some energy exposure no matter what. And I'm not looking for a trade to materialize. I'm really not. I'm looking at industrial miners. I'm looking at uranium miners. I'm looking at aerospace. Like, those are the things that are falling on my radar screen, and nothing on the oil market is landing on my radar screen by itself. So I can't go looking for something to go on.
The uranium miners, I just came off, as everyone knows, an energy conference last week, had the opportunity to talk to the CEO of NextGen, some other really interesting players in the space. They're really feeling like these policy moves, by the way, not just in the US, but Canada's fast tracking a lot of regulation, a lot of permitting, trying to get these energy projects online just because of the huge demand. What's happening in uranium that has you interested? Has it on your chart? And what are you watching there?
You know, a headline came out directly from the Trump administration, if not directly from his mouth, that they are going to triple the use of uranium power here in the U.S. You know, and that I think that coincides with the move. You know, in uranium miners, they're up 40% year to date. You know, behind only gold miners at this point. They've actually taken over in aerospace and defense. And CCJ, watching that thing double from 35 to 70, like I think that tells the story right there. These things are going to be in play. When you see a move like that, that's such a breakout move for a lot of the individual names, Next Gen, CCJ, Cameco, and the whole entire sector goes with it, and the commodity is following along. That's a nascent bull market to me again. You know, and it's going to have support from the government, and it may be a slow moving bull market. But this year, if you didn't get into uranium miners, man, you're really missing out on that performance and that narrative that they are going to be looked upon for a bigger source of America's power.
Yeah.
And, you know, it sounds like we're going to be building, you know, more and more nuclear energy facilities. So, I mean, the whole sector looks like it's in good shape and responding well. So that's something that I have to get my clients into.
Yeah. Good stuff. J&J asking, if TG is looking at industrial miners, how does he like to play the space? Is it ETFs? Is it single names?
The way I always do, man, I play the sector itself. You know, the sector, pick a sector ETF, pick a sector chart that you like. I don't like trading individual stock names at all. I like trading sectors where I feel I have a better understanding of where they fit in the bigger stock mosaic. And I don't like to have too much single stock risk unless it's like a stock that finds me, like I've talked about, like Costco or something like that. But XME is really the way that I'm playing it. I like to stick to a finite number of securities so that I get really familiar with them, and I'm familiar with the prices and the charts and that. So I kind of just stick to my set of kind of boilerplate sector ETFs, and those do the job for me, man. I get my trading and risk Jones just as well through those as I do through individual names.
Yeah, and we've heard this before when we've done sort of people who have a lot of experience talking about how they sort of create a framework and how they master it. And Tony, you and I have had this conversation in the past, but not having too much on your pad is huge, because people tend to see something, they like it, they hear about it, and they keep adding. But you have a hard time. Denise Schull and I have talked about this when she advises clients. You have a hard time keeping across everything, and so it's always good to go back and prune, right? And so that you can like really understand the price movement, especially if you're in a trading perspective.
Totally. I mean, you nailed it on the head, Maggie. It's like trading is about having an edge. And having some kind of edge to lean on is so difficult to find that how could you possibly have a position pad with more than 10 or 15 positions on it with an edge in all those positions? How? There's not that many edges out there in the market all the time, right? So I got to feel like when people have an excessive number of positions that they may be outsmarting themselves in terms of the way to make money. Like I've always made the most money when I've been most invested in a small number of positions that I've got dead right. And I wind up throwing out all the other losing positions so that I could get bigger in the ones that are making money and really kill that thing.
Yeah.
You know, so that my risk automatically funnels down to the ones that are doing the best.
Yeah. And that's a really smart way to approach it. Again, that's not saying if you're like for your long-term, buy, hold, forget about it.
Doesn't always work. Work. But
that's different. But if you're looking to do that. Another question from Sam again, any more opinion on silver? Is it a base metal? Is it trading as a base metal, or has it switched back to monetary with this breakout?
I got to tell you, it's a real breakout. The chart looks good. I'm rooting for the silver bulls, and I am not going to leave my feet from the position of it's as much a base metal as it is a precious metal. And it's going to be even more danger if the dollar retraces, because I have a feeling that on the way down, you're going to find central bank buyers of gold. On the way down, I don't know if you're going to find any buyers of silver and platinum. Like those might just bottom out if the dollar rallies, where I think gold is just a much steadier, obvious bull market with obvious buyers. I mean, we know Central Bank of China has been buying gold, and on a dip, they probably come alive somewhere. Silver and platinum, you're in an elevator where the bottom might literally fall out, if you ask me. And that's just my opinion, because platinum has been, just rallied in the last 5 seconds, right? Or the last month, but I'm exaggerating. That just came to life. And silver has been kind of, skitching along. And now all of a sudden we got to break out through 34 and the chart looks good. So I can't be as much of a naysayer in silver as I had been, or maybe that I want to be. But I can just root for the bulls to make money. It's just not my trade.
Yeah. Yeah. If any of you missed my conversation with Dale on Monday, just talking levels, especially when it comes to the dollar, he's got a kind of contrarian call on the dollar, and different than the sort of long-term lower trend that people see, but short-term, he thinks that there's going to be a bounce. So if you are wondering, and if you have some things that are tied to the dollar, go check that out. I think it's important. You
That'll
mentioned
shake things up.
Yeah, exactly. And like, again, if it's short term, Tony, like a short term bear market rally, does it matter? Or anytime you see the market dollar reverse, it's going to have repercussions.
It's gone so far so fast now that a retracement rally of 3 or 4% in no time at all is totally possible, and it'll still be in a bear market. You know what I mean? Like, the thing has only traded the bid for the entire way down. So God forbid we trade to the top of the channel. If you stretch out this down move and make it a much less steep move and see where the sort of top of that channel is, that's still going to be a really significant move now. And like I said, that's going to shake things up in the precious metals market. And we'll see how it shakes out and what the survivors are if there's an actual dollar retracement move. Yeah. But I mean, it's hard to think that this downtrend is going to reverse, right? Rather that it's just going to sort of back and fill, work off being oversold, and then go down again. Like, it looks like the dollar is headed for a different level that we haven't reached yet. So
yeah, which would be maybe like a rebalancing and a recalibration that is needed. A lot of people are saying that was so overextended, but watch out for those cross correlations.
Especially if Trump gets rates down to 1 or 2%, or God forbid close, like he says, the flow is going to come naturally and the dollar is going to go down.
Yeah. So with that, Tony, we know he wants the Fed to lower rates, and they may be able to have some impact on the short end, but for the rates that matter, that 10-year, that's really got to be down to sort of, fiscal policy and other things like that. You think the bond market's just going to go along with Trump? I mean, they haven't before,
No, they have. They are. I mean, there's visible signs of bond market rallying every time Trump kicks the Overton window wider open. Right. Like, he's allowing his statements to do Powell's work for him. Right now, he doesn't go out and write a note to Jerome Powell on a table of interest rates because he thinks it's cute or he thinks it's clever. He does it because it moves the market for him. You know what I mean? Like, the more extravagant he gets about getting rates down, the more the market has to say, shit, this guy's serious. So we have to adjust. Right. And so I feel like that, he's acting like the Federal Reserve chair himself, who manages rates by making statements saying, oh, yeah, well, there's a really good chance that we lower rates at the next meeting if the data lets us. You know what I mean? All of a sudden, the market's like, there's the rate cut.
Yeah. Well, by the way, the data is cooperating, because we're seeing some weakness and some softness, right, in the labor market.
There's certainly no headline inflation, and the employment market and GDP certainly aren't firing like we're in an economy that's taking off. So yeah, there's room and reason for rates to go lower now.
Yeah. Do you have a recession on your card? Are you worry about that? No, you're like, no.
I hate recession bros secretly.
Very
quietly hate recession bros because they're just glass half empty people. We're looking at the same data. I'm seeing the glass is half full because I'm an optimist. They're seeing the glass is half empty because they're a pessimist. And I usually win in the end.
I like that. Paul saying, by the way, Trumpzilla eats the Fed. That might be the summer. That might be the summer movie. Last summer, Tony, in fact, it was right before I officially launched. You and I caught up informally because, oh my gosh, we had the yen carry freak out. The markets were going crazy. It was one of like the many times that we were on air that the markets were really on the move this year. What if anything do you think is going to disrupt this summer calm? I know you like volatility because it presents opportunity, and it looks like we're kind of, if they get this bill through and everything quiets down, people are going to try to just cruise through and maybe take some break and some much needed time off. But if there's anything that worries you to come out that could cause kind of some kind of market event, where is it?
An asteroid.
That's how optimistic you are.
Well, I mean, you asked me to think of something that will derail the markets in July after we've been through Liberation Thursday, the worst of the trade war. We bombed the piss out of Iran. We got the big, beautiful bill passed. Like, there's not a lot of unknown knowns that need to be uncovered. right? Like there's a lot of not a lot of stuff out on the agenda that we can argue about for the market's sake, aside from a rate cut that's going to derail this right now. I mean, it's just not out there. That's why the idea is that, an asteroid to Times Square on Saturday afternoon would be bearish.
Yeah.
If you want to sit and wait for that. But if you're short and looking for that to let you out, you've got a problem.
Interesting. And by the way, the market's been very quick, even for events that in other parts of your brain are worrying or disturbing, as we saw in the Middle East. For the market reaction, it's been incredibly quick to sort out what has an impact and what does not. So, to your point, it would have to be something really, some kind of failure really tied to a market in order to have an impact. Tony, it was so fun to hit the midweek point with you. Thank you so much. We always appreciate your fantastic insight and all your great experience.
I always appreciate you having me on, Maggie. I really love it. You're the best.
Thanks so much. Tony and I both have college kids that are home that are bankrupting us, leaving dishes in the sink, and we need a holiday and a break, people. We need a day off. I don't know if any other of you are in that position, but
I know. And I just found out one of my kids is away for the weekend and the other two are working all weekend. So there's going to be nobody to clean up after.
Fantastic. All right. Yeah. You and I are both going to get a deserved break. But remember, everyone, for those of you who are not seeing in the US, it is a market holiday on Friday. Markets are closed for July 4th. And so barring any weird circumstance, probably going to be really quiet heading into the weekend. So we will be off for that, but we'll be back with you next week. So thank you so much. Enjoy the long holiday weekend, everybody. Take care and good luck out there.